The 20 Advices of Jesse Livermore. Before the world ever knew the names of modern traders, before Wall Street was turned into a machine of algorithms and high-frequency orders, there was one man who stood above the rest, a man who didn't just trade the market, he understood its soul. Jesse Livermore. A legend, a mystery, a man who built fortunes and lost fortunes, all while discovering the psychological laws that still shape trading today. He started at the bottom, a teenager writing numbers on a chalkboard in a bucket shop. But even as a boy, he saw something others didn't. The market speaks, and price is its language. By the age of 20, he wasn't just participating in the market, he was beating it. Repeatedly, consistently, fearlessly. Livermore wasn't a trader who followed opinions. He followed behavior. He followed patterns. He followed the raw truth of price movement. But what truly separated him from everyone else was not his strategy, it was his mind. His patience. His discipline. His ability to sit tight during opportunity and sit out during chaos. His understanding that the biggest battle in trading is not on the chart. It's inside you. He made millions when the entire world panicked. He predicted crashes when experts laughed at him. He earned a reputation not just as a trader, but as a market philosopher, a man who discovered the laws of human behavior long before psychology was part of Wall Street. Today, his teachings are studied by hedge fund managers, long-term investors, and day traders across the world because one truth never changes. Markets evolve, but human nature does not. And Jesse Livermore mastered human nature long before the world understood its power. This video is not just about trading rules. It's about the mindset of a man who turned observation into a weapon, discipline into wealth, and patience into an art. Let's dive into the 20 mindsets of Jesse Livermore. The principles that turned a young chalkboard boy into one of the greatest traders in history. 1. The market is never wrong, your opinion is. There's a moment every trader faces, that uncomfortable realization that the market doesn't care about your beliefs. Livermore mastered this truth early. He understood that as traders, our job is not to force the market to agree with us, but to listen to what it's showing. Every candle, every level, every move is information. The trader filled with ego interprets the chart as a battlefield where his prediction must win, but a professional sees the chart as a teacher and himself as a student. When price goes opposite to your expectation, the market is not insulting you or attacking you, it's teaching you, correcting you, guiding you. Your frustration comes not from price, but from your resistance to reality. The faster you respect the message price delivers, the faster you align with its rhythm. And once you learn to drop your opinion, the entire market begins to make sense. 2. Your biggest enemy is inside you, not on the chart. Livermore said that charts don't hurt traders, emotions do. Fear makes you close a winning trade too early. Greed convinces you to hold a losing trade too long. Impatience pushes you into setups you never planned. Overconfidence makes you size up at the wrong time. It's not the liquidity, the manipulation, the spreads, or the news that destroys accounts. It's the emotional storm inside the trader. Livermore treated his own psychology as part of his strategy. He saw trading not only as a market challenge, but a battle of self-control. When you wake up every day and sit at the charts, you're not just trading EURUSD or XAUUSD, you're trading your discipline, your patience, your mindset. The trader who wins this internal war becomes unstoppable. 3. A trader must learn to sit when conditions are unclear. The market is not a place where you make money by doing more. Livermore built fortunes not by taking endless trades, but by waiting through long stretches of uncertainty. He said some of the hardest and most profitable moments in his career came from sitting on his hands while less disciplined traders jumped into noise. You must learn the power of stillness, the courage to do nothing when nothing is clear, the ability to wait without anxiety. Most traders lose not because they lack a strategy, but because they lack patience. They want action. They crave excitement. But Livermore knew that the market pays the calm thinker, not the restless gambler. The trade you don't take is sometimes the trade that saves your account. 4. Only trade when your edge is obvious. Livermore didn't trade because he wanted to, he traded because he had unmistakable opportunity. He waited until his edge was clear: strong trend, clear structure, aligned momentum, and market behavior that supported his thesis. He never took trades out of boredom. He never forced setups. He believed that if a trade didn't practically pull him in with clarity, it wasn't worth touching. This mindset will instantly elevate your trading. The difference between forced trades and genuine setups is the difference between slow, steady growth and constant emotional chaos. When the market aligns cleanly, you'll feel it. Your mind becomes calm, your conviction is clear, and the trade almost takes itself. That's the edge Livermore respected. 5. The real money is made in the big swings. Livermore built his fortune on massive, powerful moves, not small scalps, not quick flips, not endless tiny profits. He understood that big trends shape the future of markets, and riding them is where generational profits come from. Holding a position during a real trend is psychologically demanding. Your mind will tempt you to take small profit. Your emotions will scream to exit early. But the trend doesn't reward the impatient, it rewards the disciplined. Livermore learned to sit tight during profitable moves because he knew that the real wealth lies not in catching 10 pips, but in catching hundreds. When the market gives you a rare, clean trend, hold it like your future depends on it. 6. Never average down on a losing trade. One of Livermore's most famous teachings: adding to a losing position is the fastest way to financial destruction. A losing trade is telling you something: your thesis is wrong, your timing is off, or the market is shifting. Adding more money to a mistake does not fix it, it magnifies it. Livermore believed that the moment your trade goes against you, your focus should shift to managing risk, not doubling down. Professionals accept losses quickly. Gamblers try to rescue them. And in the end, the gambler always pays. Protect yourself by respecting the message a losing trade sends. 7. Add only to winning positions. Livermore was aggressive when the market confirmed his direction. He pressed his advantage. He added size during strength because strength meant alignment with the trend. When your trade is working, it's a sign the market agrees with you. This is the safest moment to scale. Adding to winners builds exponential gains without exposing you to unnecessary risk. Adding to losers builds exponential risk without any gain. Livermore's principle is simple: reward your correct decisions, not your mistaken ones. Let strength grow stronger. 8. Protect your capital as if your future depends on it. Livermore said survival is the foundation of every trading career. Without capital, you have nothing. No second chances, no opportunity, no ability to recover. You must treat your account like a living organism, something that must be protected at all costs. This means strict risk management, controlled exposure, and respecting stop losses. A trader who protects his capital has unlimited future potential. A trader who risks recklessly has no future at all. 9. Think in probabilities, not certainties. Livermore didn't look for guarantees, he looked for advantages. Trading becomes calmer when you see it as a game of probabilities. You stop expecting every trade to win and instead focus on executing your edge repeatedly. You think like a mathematician, not a fortune teller. Certainty creates emotional attachments. Probabilities create emotional freedom. Livermore built every decision on what is likely, not to what must happen. This mindset will free you from fear and disappointment. You become a strategist rather than a gambler. 10. A trader without discipline is a gambler. Livermore believed discipline was more important than skill, more important than intelligence, more important than experience. Without discipline, you will break your rules, chase the market, revenge trade, overtrade, increase risk, and eventually blow your account. Discipline is the silent superpower of elite traders. It turns your strategy into results. It protects your capital. It keeps you grounded when your emotions want to take over. Discipline is the true edge in the market. Everything else is secondary. 11. Your goal is not to catch tops or bottoms, just the middle. Livermore didn't believe in trying to predict exact turning points. He said the safest and most profitable part of a move is the middle, the space where trend, momentum, and structure are all aligned. Trying to pick tops and bottoms leads to constant pain, stress, and unnecessary losses. The middle of the move is where the market is clearest. The middle is where confidence grows. The middle is where Livermore built wealth. This mindset frees you from perfectionism and lets you trade clean, simple, profitable structure. 12. Losses are tuition, respect them. Every loss Livermore took taught him a lesson. He treated every losing trade like a teacher, not an enemy. Losing is not failure, it's feedback, it's a signal, it's information. The market is teaching you what works and what doesn't. It's showing you where your edge is strong and where your discipline is weak. When you embrace losses as tuition, you stop fearing them. You stop running from them. You learn from them, and the lessons last a lifetime. 13. Never let a small loss become a big one. Livermore believed this was one of the most important rules in trading. Small losses are harmless. They are part of the game. But when you refuse to cut them, when you hope the market will reverse, when you convince yourself to wait just a little longer, the loss grows and grows and grows. Big losses don't come from the market, they come from hesitation, pride, and emotional denial. Cut small losses fast and clean. It's the habit that protects your entire account. 14. The trend is your greatest ally. Livermore studied markets deeply and realized that trends reflect collective behavior. Trends show where the money is flowing, where institutions are acting, where momentum is traveling. Fighting against the trend is fighting against the entire market. Trading with the trend is trading with the force of the market behind you. When you align with the trend, your trades feel smooth, calm, and structured. When you fight the trend, your trades feel chaotic and stressful. The trend is not just your friend, it's your guide. 15. Be a student of your past trades. Livermore kept detailed journals because he knew that patterns repeat, both in the market and in your behavior. The charts show price patterns. Your journal shows your patterns. Most traders repeat the same mistakes for years because they don't study themselves. When you look back at your trades with honesty, you begin to see your traps, your impatience, your fear points, your emotional triggers, your strengths, your weaknesses, your recurring errors. This self-study is what creates growth. The trader who studies his trades becomes his own mentor. 16. Patience is a position. Livermore said that waiting is not passive, it is strategic. When you wait, you conserve emotional energy and preserve financial capital. Patience allows you to avoid weak setups and stay available for strong ones. The market will tempt you with noise, half signals, and distractions, but patience gives you clarity. When a real opportunity appears, you will be ready, calm, sharp, and disciplined. Waiting is a powerful move. It's a skill. It's part of trading. And it's what separates profitable traders from impulsive ones. 17. Stay emotionally neutral. Wins and losses must not shake you. Livermore stayed balanced whether he won big or lost heavily. Emotional highs lead to overconfidence. Emotional lows lead to fear. Both destroy consistency. Your goal is to remain centered, steady, calm, and focused. Whether you just doubled your account or took a painful loss, your next trade should be executed with the same disciplined mindset. Emotional neutrality creates longevity. It gives you clarity. It protects your decisions from emotional bias. The market rewards calm traders, not emotional ones. 18. Don't predict, react. Livermore never tried to force the market to follow his predictions. He followed the market instead. He reacted to what he saw, not what he wanted to see. This mindset removes pressure. You stop trying to be right and start trying to be aligned. You stop trying to guess the future and start reading the present. The market becomes easier because you aren't fighting it, you're flowing with it. 19. Confidence comes from preparation. Livermore prepared before ever pressing the buy or sell button. He studied the market environment, the major levels, the risks, the sentiment, the trend, and his own emotional state. Preparation builds inner strength. When you prepare deeply, you enter your trades with calm conviction. You don't hesitate, you don't panic, you don't doubt. Confidence isn't magic, it's the result of preparation. A prepared trader moves with clarity. 20. Master yourself, and the market becomes easier. In the end, Livermore believed that trading is not a battle against the market, but a battle against yourself. Once you conquer your emotions, your impulses, your ego, your fear, and your impatience, everything becomes clearer. You begin to see the market as it truly is. You stop fighting trends. You stop forcing trades. You stop sabotaging your progress. When you master yourself, the market feels simpler, calmer, and more logical. Self-mastery is the real skill. Everything else follows naturally.